Welcome to Vintage Camper Trailers Boot Camp. My name is Tim Hines. I am the owner of Hines Designs Vintage Trailer Restoration Shop in Panama City, Florida. Today we'll be talking about insurance on your vintage trailers. It can be a very tricky subject and a lot of things to get confused, but we're going to try to explain a few things about the insurance industry with vintage trailers and make sure you have the right coverage that will safeguard your investment. First, we're going to talk about a few other terms before we get into the actual type of policies that you may want to choose between. One of those things we're going to talk about is the liability. Liability coverage is a type of coverage that protects you from the legal liability of bodily injury and property damage that you cause to others. It does not cover the injuries to you or any of your passengers, and it does not cover damage to your rig. Liability is the coverage that is legally required in almost every state for drivable RVs and vehicles, but not for travel trailers that are towed. However, it is required for the tow vehicle which carries the towable RVs while driving. So if you have liability coverage on your vehicle, which you should in most states, then it's going to cover over to the trailer that you're towing. So you do not have to have a separate liability coverage over your tow vehicle. But please make sure you check your local state laws and see if that is the case. The liability coverage required varies by state and is usually expressed in the state laws as minimal coverage limits. If you have liability coverage, please note that the state minimum in your state may not be adequate to protect you from the potential liability of an RV accident. Large RVs and travel trailers tend to cause more serious bodily injury and property damage, which you could be personally liable for with claims that exceed your state minimums if that's the minimal requirement that you've chose. Another term is going to be the uninsured, underinsured coverage. And this is a type of coverage that protects you and your passengers when someone without insurance or someone that is under insurance hits you or your RV. About half of the states in this country have at least uninsured motorist coverage that is required for motorhomes and tow vehicles, but not travel trailers. States where it is not required will allow the coverage to be added to your policy as an option for an additional premium. Most people will get both coverages because the premiums are relatively low for this option. You can get uninsured, underinsured motorist coverage for bodily injury and or property damage. Uninsured and underinsured motorist coverage is basically the opposite of the liability coverage that we first discussed. Liability coverage covers other people when you hit them, while uninsured and underinsured motorist coverage protects you and your family, including passengers, when someone hits you. A comprehensive coverage. This is mostly just for drivable RVs. This is not for travel trailers. So if you have a vintage RV, you may want to, look into this. This type of coverage is typical of RVs only, the drivable rigs, and covers damage to your RV not covered by collision, which can include such damage as impact with animals, explosion or earthquakes, fire, vandalism, falling objects, riot or civil commotion, theft, larceny, windstorm, hail, water, flood, breaking of glass that is not caused by a collision accident. So don't always assume that everything is covered. You may have to get a comprehensive coverage policy to cover some of these items that are not found in your actual policy. So please make sure you read all the fine details and know what's covered and what's not covered. And then the last term we're going to talk about before we get into the policy is a total loss coverage. This type of coverage is typically the best option for vintage rigs, whether it be travel trailers or drivable RVs, as it covers most of the previous listed items. So please double check to make sure all of the different types of damage will be covered. But the question is, how much will the insurance company pay if we have a total loss to your rig through an accident, flood, fire, or any other type of disaster? This is where the actual types of policy and valuations come into play. You will find that there are basically two types of total loss valuations. Market value, also sometimes called actual cash value, and then a policy that is known as agreed upon value. A market value or actual cash value usually is the basic standard among most insurance companies offering RV and travel trailer policies. However, it means that you will not be paid the actual market or cash value of your RV at the time of the loss, less the deductible. Insurance companies will use something like NADA, Kelley Blue Book, or their own comparable market data to evaluate and value your rig pre-damage. Unfortunately, with vintage RVs and travel trailers, there's very little correct data available and will possibly result in the insurance company making the final determination of the value of your rig, regardless of what proof you may be able to provide stating a different value. The best kind of policy for vintage rigs, whether it be a motorhome or a travel trailer, is a policy that's known as agreed value or agreed upon value. It's kind of an upgrade option. It does have higher premiums, but it is the best for vintage RVs. In the case of a total loss, the insurance company will pay the agreed upon value, which is exactly what the policy stated when you first got the policy. It's a value for your rig that you and the insurance company agreed on from the beginning, with a provided professional vintage trailer appraisal in most cases. Not all insurance companies will require an appraisal. Most of them by this time have started that as a standard requirement, but there are still a few out there that is not. But this coverage is best for bus conversions, custom RVs, vintage RVs, travel trailers, anything that doesn't have a standard market value that can easily be looked up, much less like brand new rigs. And newer rigs are easier to look up. There's data out there that'll tell what the depreciated value is and what the market value is for them now. The agreed upon value is usually based on the appraisal of the rig. Each insurance company will vary, but some companies still, like I said, do not require an appraisal to be supplied. But even in those cases, I highly recommend to have an appraisal on file regardless, whether the insurance company will allow you to send it in to them and they keep it on file, or you keep it on file at home just in case you have to file a claim. You've got some sort of proof of valuation before a claim was needed. So it also helps with if there's a disagreement between the insurer and yourself after a claim has been filed. You also need to ask your insurance company how long they're going to honor that appraisal. Most insurance companies will honor an appraisal for 5 years or even 10 years, but please get that in writing, get an email from them saying, hey, how long is this appraisal going to be good for? And make sure you keep up with that, because one day past that date, and then it's going to join or jump down to a depreciated value. So your policy will change where they no longer honor the appraisal because it's out of date, and it's going to be your word against their word, and they're going to say, okay, if your policy was set at a certain amount, we'll go with that, but it's also 50, 60, 70 years old, so we're going to put 50, 60, 70-year-old worth of depreciation on that amount. And that's going to eat up a lot of value just right there. So if your agreed upon policy is $35,000 and there is a total loss, you should be paid $35,000 minus your deductible. Although the current market value of that RV at the time of loss may be even less. But because this coverage puts you in better shape than just making you whole, it protects you from possible depreciation. So then the question is, which coverage or policy is best to protect you? This is going to be something different for everybody. It really depends. If you're trying to keep your premiums as low as possible, and you have the funds to cover significant damage or even total loss to your rig, then you probably could go with just liability coverage. You might even be able to add, your if it's a vintage motorhome that you drive, you may be able just to add it to the same coverage that you have for your everyday vehicle. So you're not worried too much about the full replacement cost. You're just wanting to be able to have something if you do get damage. You want to do the work yourself, but you want a little bit of money to help buy parts. You're not trying to make yourself whole. It's just a bit of a buffer. So if you're trying to keep your premiums low, but you still want to be covered for any damages to your RV from any cause, then you'll want liability for an RV, not a trailer, and comprehensive coverages. But you may opt for the standard market value cash value total loss coverage. However, if you go this route, you must understand that the insurance company will likely use NADA, Kelley Blue Book, or their own market value to determine the value of the rig after the claim has been filed, with the possibility of deducting value due to the age of the trailer, so depreciation. regardless of the initial pre-claim value that you put on the policy. But if you care more about being able to replace your rig completely in the case of a total loss, and you don't have the funds to make up the difference after a market value payout, then you'll definitely want an agreed upon value. The risk may be relatively low for a total loss, and the premiums may be a bit higher, but if a total loss would be financially difficult for you, then you can swing the extra premiums, then this is the type of policy that's best option to protect your vintage rig and your investment. So we also get asked a lot of times, how do you determine the value? You know, some insurance companies may say, just go out there, find something that's sold similar, print it out, send it to us. That may work for a lot of insurance companies, but still it can be questionable if it gets down to the point that you need to file a full claim and you're sitting here and you're like, okay, this is the one we found that sold very similar to ours. Well, you run the risk of the insurance company, if they're really apprehensive about paying out, of trying to find certain ways that one may not be exactly like yours. It may had different features inside, or it may not have been quite in good shape as yours, or it may have been a little bit worse shape than yours. And they're going to say, okay, well, this is not quite like yours, so we're going to have to depreciate the value based on yours had this and this one had that. They're going to start trying to just nickel and dime that value down best they can. So really your best option is to get a professional vintage trailer insurance appraisal. There are several companies out there that offer this. Do your research, find somebody that's well known in the insurance company. Our company here at Heinz Designs, we're one of those companies that can offer vintage trailer insurance appraisals. And it's a very easy process. We actually can do it with photos that you provide to us. We do not have to see the trailer in person. You can provide photos, whether it be an online photo album, emailing photos to us, or you can even send them to them by regular mail. You can put them on a jump drive, DVD, or even print them out and send them to us, hard copies. Whatever's easiest. We don't need to see, hundreds of photos showing the whole restoration process, because as appraisers, we have to appraise it in the as-is condition. So we need to see the trailer as it is now, not throughout the whole process. Now, we can still take the consideration of everything that was done to the rig. So if you did a lot of upgrades, we need to know that by email. We need to know things that may not show in the photos, like new wiring, new breaker panel, circuit breakers, replacing the water heaters. Things like that won't show in the photos, but stating that, we can take that into consideration. It's very easy process. I mean, you've already invested a lot of money into these vintage trailers. It's worth having the right kind of policy and the right kind of appraisal, that you've got something to fight with should you have to prove the value of your rig. It's just, we get so many emails, phone calls from people. They thought they had the right policy. They thought liability would pay out something, and then it was too late. And it is very, very, very difficult to fight after the fact. So it is very important to make sure you've got everything lined up in the beginning. You know the ins and outs of your policies. Make sure you get everything in writing. If there's anything you question with your policy, don't feel bad to question the insurance agent you're working with. I've done the same thing myself. I used to have insurance through an insurance provider, and they told me at that time, they were very adamant that I needed a stated market value policy, not an agreed upon value, because they tried to convince me that it was the same thing. And they would even say, well, our insurance company's different. We do both of them the same way. And I was very apprehensive about it, but I went ahead and said, okay, let's go with it. They wrote the policy to me, sent it to me, and when I went through and read the fine print, and the fine print clearly listed in there the depreciation clause of, no matter what we had the value set on that particular Airstream of mine that I had insured, that they were going to depreciate the value based on the age of the trailer. And when that comes to vintage trailers, that can be a lot per year of depreciation. So I had to call the company back. Thankfully, I found it very early, and I'm like, what's this in this policy that's stating this? And the agent was confused. He had never seen that, never understood it. They just didn't know what they were really talking about between the two policies. And it ended up going all the way up to the main headquarters of this insurance company, and they called me back and said, you're right. This is not the right kind of policy. We don't know why. We found out that almost all of our agents assumed that both policies were the same. So if it doesn't seem right, read the small print. If you're still questioning it, question them about it. Don't feel like, okay, I got insurance, I'm good, because when it comes time to file a claim, it may be too late. We have helped people in the past with legal cases, fighting insurance. Sometimes they're successful, sometimes they're not, and it can be a long, drawn-out deal. So a little bit of extra money on premiums, and a little low cost on an appraisal, and you ain't got anything to worry about. So always do your due diligence. Make sure you got what you need to do. Check your state laws. Make sure nothing changes, because laws can change with insurance. Just keep on your toes when it comes to this insurance, because when you've got so much money invested in these vintage trailers, got to be smart with them. So I hope that answers questions about the insurance. If you have any other questions, you can always reach out to us. Our website is heintzdesigns.com. Our email is also heintzdesigns, but it's at AOL.com. Or you can call us at 850-481-8339. That is our office number here at our shop. And you can also comment below this video, and we'll do our best to answer any of your questions you may have. So I hope that helps you with the insurance policies, and have a great day.